Good morning, traders. It's Wednesday, February 26th. Taking a look at the charts, we've got the SP 500 here. And if we just look at the recent type of sell-off and the market leading up to it, if we go back in time and look at the market action, you can see we've seen similar types of market crashes where we've had these very sharp bouts of selling. And if you notice what happens after those, you see the market consolidate for a while and really trade sideways in a bigger range for a while. You can see over here, consolidated, had a continuation washout low, and over here it rebounded and traded sideways for quite some time before it started to break out. So this type of damage that's happened to the market, we broke this low here. Really, this other low below here, there was a spike low over here. We've done quite a bit of damage, breaking three short-term significant pivot lows. And that's what happened during these other times here where you start to break previous lows and a lot of damage gets done. If we take a look at the volume, you can see the size of the volume spikes the last couple of days, very similar to over here. Big spike over here in the crash, big spike over here. So there's a lot of damage and fear, and more or less everyone is now spooked. Now the market is most likely going to start to trade sideways. It's going to rebound probably significantly, but overall it's not going to hit new highs for a while. I think we could see some type of consolidation. The big question is, does it consolidate and continue to go lower, or is it going to consolidate and then eventually work itself higher? So that's kind of where we are in terms of the markets, the way that the stock market and bonds have moved. It's really tough to short a market. I talked about this the other day that when you're in a bull market, the drops happen violently, very quickly, and unless you're trying to pick a top, it's not many ways to really catch these drops. You might catch one day or half a day or so in there, but overall, as the stock market rebounds and trades in a big range here, this is when we should actually start to see bonds and safe havens move higher. So instead of trying to be short the indexes, because the bias is they're going to trade sideways to higher, you want to get into the safe havens where everyone's nervous and money just slowly continues to creep into bonds and hopefully precious metals and miners going forward. Now, with that said, there's enough fear in the market, and the way that the fear is, from my kind of idea here, is that there is this coronavirus going around, and we all know what happens when you're sick and you're not feeling well. Money means absolutely nothing. It just becomes preservation. You just want to feel better. And money really just came out of all the asset classes yesterday. Everybody's dumping stocks. They don't care about speculative plays, getting into gold miners. They just want to cash out and they move to bonds. Just stick their money in something ultra safe and focus on preservation and not getting sick or getting healthy. And that's kind of the vibe that I'm picking up in the market. So overall, we got a lot of fear here, and I think it's going to continue to drag out for a while. And if this continues to spread, this coronavirus, I think we could see the market just consolidate, form a big bear flag, just like over here. It comes down, forms a bear flag, and then you get the second half of the move in a washout low. We could see something very similar to that and see the market sell off again in due time if things continue to get worse with China closing down factories and all that stuff. So let's go take a look at the rest of the market here. Bonds are down 0.5% this morning. More or less, money is moving into equities. The SP 500 up 0.4%, Nasdaq up 0.6%. So money is flowing is flowing into stocks. Stocks are oversold from yesterday. I mentioned this in yesterday's post-market update. We're looking for some type of oversold bounce, but keep in mind the trend for stocks. Let me just go back to our trend analysis here. Actually, I'll pull this chart up. So here are the three charts I generally post in the morning. This is the SP 500. This one here is a chart of gold, and this one here is bonds. More or less, bonds are moving up and holding their ground. People are starting to move out of the other safe havens like gold. We're seeing that sell off, and gold miners the same thing. If we just stretch over the gold miners chart, you can see gold miners selling off as well. Just money is flowing out of speculative plays of any sort and just going into bonds, and it's kind of preservation mode at this point. But if we look in the middle chart, SP 500, you can see it sold off, got oversold, And then yesterday we got orange bars indicating the trend is changing and things are going to get real violent. We could see continuation washout low, which we had some more selling to new lows in overnight trading, which is actually usually a good sign. Usually we see it wash out to new lows and it's starting to, it's having a strong recovery. I mentioned this yesterday that we're looking for some type of push to a new low yesterday, followed by a sharp knee-jerk recovery. Well, in overnight trading this morning, we saw it sell off to new lows, and now it's actually posting some half decent gains, up about 0.5%, and we could see a huge rally back up. And of course, the 20-day moving average will act as a fairly significant resistance area. So we could see a really strong volatility in the equities market. But my point here is bars are going to be orange, likely going to turn red eventually, and we could see this continue to head down in bonds. Bonds, I think, could pull back and flag for a little while before they maybe take another run. And of course, they'll pull back, the stock market will rally. That's what we're starting to see today. And I think there'll be potentially a new opportunity to add to the bonds play going forward if it pulls back, because we could see it continue to move higher. Now let's go take a look. Let's take a look at just the daily chart of bonds. You can see bonds here came up, tagged this high. Overall, it's struggling. We are above the 5-day, so it could pull back and struggle sideways for a few days till the 5-day catches up. And then for all we know, if this momentum continues, we're going to see it pop and really take off. But we are at resistance. You can see we got big volume. So more or less, there's a lot of resistance there. Buying volume is stepping in, trying to eat through that resistance. If there's more fear in the equities market, we could see this break out and really start a significant run. But at this point, again, it's had a nice run, consolidation or run. And I think we're going to see safe havens consolidate for a few days as the stock market has a little bit of a dead cat bounce up in price. Looking over at gold, down 0.8%. The type of price action we're seeing here, let's just zoom in a little bit. Again, a lot of people got sucked into this super excitement phase, the exact same vibe and phase we had over here where the market goes, and you just get this huge type of price action, and then of course it fizzles out and trades sideways for a while. This is kind of the short-term euphoric stage where it just gets overdone, everybody piles in, and then has to sit tight for a while. That's what's happening again now there. If we look at silver, it's down 1.8%, really rejected at this line again. We were rejected over here as well, here, and we're coming back down. Again, still very bullish price action long term, just short term, it hit its targets. Everything's pulling back. Nothing is really out of the norm in terms of the safe haven plays. They're doing exactly what they should be doing for long-term steady growth. Looking over at gold miners, GDXJ, big reversal day. We got out, our trigger was triggered right at the open at 46.41. It has now crashed about 7.5%, and it is set to open slightly higher. It looks actually relatively flat on this session, but again, I think we're going to continue to see this pullback and chop around for a while and build a new launch pad to hopefully continue to go higher going forward. Looking over at energies, natural gas up 0.5% this morning. It has changed its momentum from a downtrend to an uptrend. It still hasn't cleared and held above the 20-day, which is not ideal, but the momentum has shifted trends, and now we're looking for a pop and a continuation move. Hopefully it starts today, because we don't really want to see this go down too much further against us. Overall, it's settling right down into support, into this low, this consolidation through here, this high. And if it gets some traction, we should be off to the races for a nice move to the upside, to the 225 all the way up to about the 250 area if we get that type of move that I think has been building up. There's a lot of short positions built in here. When the short covering hits, I think we're going to pop very quickly to the 220, 225, and then from there, hopefully we see it grind higher up to this green line. Looking over at crude, down 1%. It is down testing these lows today. It's actually poking down and threatening these lows. It's broken that level. We are down at the lower end of this range again. We'll see where price closes today, if it rebounds and holds, or if it starts to close down. Again, we've been looking at this for a while, and if we zoom back on the charts, the next move, let's throw a Fibonacci target on here. Let's go from a conservative level here to this high over here. Gives us 44 based on this current closing price or opening price. It gives us downside target of 44, which we talked about almost a month and a half ago when it was trading up here. Our downside target was 44. Overall, if it breaks this low here and closes below it, we could really start to see it pick up speed to this 44 level going forward. So we'll keep our eyes peeled for a potential setup there. The energy sector obviously would be the XLE, which has actually been in free fall mode for a while. Let's just pull it up here. We'll continue to take a beating if the energy sector really breaks down. You can see yesterday it completely collapsed, formed a bear flag, gap down below at the previous session. Yesterday had continuation going to the downside. If we were to throw Fibonacci extension on here and get an idea where that's going to be, let's just see where the downside target, conservative target would be. This is where the run started, here to up here. So it almost has its measured move already hit yesterday. Now, if we were to expand and go from the full level, we could see where the panic selling could really take place. So you got the sell-off, little bear flag, and yesterday hit the 618 level, and the full measured move for this entire run and consolidation would be the 4580 area. So there's a lot of, still some pretty decent downside on the energy sector. If crude breaks down, this is really going to take another beating to the downside. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye-bye.